Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for March the 1st, 2011. Now our first position for tonight, we're going to be looking at the stock indices, specifically the Nasdaq 100. Now we've got through some of our earnings. Tech stocks took a bit of a beating last week. They're coming back now. We can see that the triple EMA from crossover from Vantage Point never completed. We had the 3-day cross the 8-day and the 18-day predicted moving average, but it's flattened out and we're actually moving higher. Now the indicators I've got here up here for tonight are the predicted short, medium, and long-term differences, along with the predicted MACD, the predicted stochastic, and the predicted true strength indicator. So I'm really throwing everything I've got at this thing to see what we're coming up with. Now, what I like about this one is the fact that we're turning back up. We've had this sell-off. A lot of this had to do with again what was happening in the Middle East. The equities, all the equities took a big hit last week. We're recovering from that. So right now, what I like is we've closed above all three of the Vantage Point predicted moving averages. That starts at 23.41 and support trails all the way down to 23.43. Now we would be looking for that 23.43 area to hold, but we've got a volatile week ahead of us, so we're going to give it a little bit of room to play here. Now, looking at our major crossovers here, we've got our short-term crossover from Vantage Point is essentially crossed back to the upside. We can see right here that's consistent with the predicted short-term difference, and the predicted stochastic supports this move. So when we're looking at these things, we can see that the medium and the long term not quite in an agreement here, but that triple EMA cross is not completed, so everything still looks pretty decent for longs here. Now what I'm also going to do is I'm going to put in the predicted high-low range from Vantage Point. We can see that we've broke the top of this range slightly today, and on Friday we really pushed above that Vantage Point predicted high. This is a bullish signal in my view, and we're not coming anywhere near the Vantage Point predicted lows. That's also a good thing for a bullish move like this. So with that said, the 23.43 area certainly is a point of interest to me, because that tells me that everything we've looked at here so far tells me it is still rather bullish, even though we're still a little bit on the overbought side. So our range for tomorrow, we've got 23.33.94 and 23.64.22. So on this particular trade, I like Vantage Point predicted lows have not been hitting the last couple of days. We've got the 18-day predicted moving average coming in at that 23.43 area. Let's pull that back up. Now again, when looking at this, we can see I've got this triple EMA cross back up, and the key level comes in at 23.43.37. So again, if I'm putting in that high-low break, we can see that we're not getting into that lower range. So this tells me I'm going to look for that 23.43 area, somewhere between 23.43 and 23.33 to get into this position. So 23.40, I'm going to allow for a bit of volatility. That's where I'm going to be looking to get back into my long positions. And again, looking at the Vantage Point predicted high and low for tomorrow, we've identified where we want to get in on the downside. Now exiting this trade, where do we want to get out of this trade? Well, 23.64.22 is the target area, so we're going to go get out of this trade a little bit before that, preferably around the 23.62 area. Once we get close to that area, that's where we could start seeing our retracement. So again, we want to make sure we get that profit off the table during volatile markets like we're currently experiencing. Now that's our first trade for tonight. Now our second trade is going to be back in the Forex market, specifically the British pound US dollar. Now looking at this thing here, this has been a very funny pair, but it's primarily been quite bullish. Now a bit of a concern I have here is that we're overbought, but again, we're overbought on a couple on the two main indicators, the predicted MACD and the predicted true strength indicator. However, the predicted short, medium, and long-term differences from Vantage Point, which are these indicators here, are nowhere near overbought. So looking at things, we've got some key level of support here, 161.20, 161.71, and 161.96. Now we've closed at 162.59. This is quite bullish compared to what the pound has seen over the last few days. Now the British pound definitely affected by what's happening in the equity markets. Now we've closed the day at that 162.59, which is still rather bullish. 161.76, 163.41 is tomorrow's predicted range from Vantage Point. So 161.76 is an area of interest to us. We're looking at, we've got this, that's the predicted 8-day moving average from Vantage Point. Our 18-day predicted moving average comes in at 161.20. So the risk to reward here is pretty decent. I would have my stops on this particular trade. We would be looking at the 161.70 area to get in. We would then be having our stops probably in about the 160.60 area. I would want at least 110 point stop on this, 110 pip stop on this trade minimum. Pound dollar, very volatile. If there's any sell-off in equities, that's going to put pressure on the pound right off the bat. So, but I do expect the buyers are likely to come back in. But my concern here is that the market appears to be inventing and reinventing ways to sell the US dollar. Bit of a concern here. I think there's too much emphasis being put on what's going on with the central banks and everything else. I believe a lot of this is market noise, to be perfectly honest. So I have a little bit of reservations on this. So I would keep the stop on this trade fairly tight. I believe that there's more downside risk than there is upside. So but for now, we want to try and stay with this trend. It's been moving up quite nicely. It's been hitting the 18-day predicted moving average from Vantage Point and consistently moving higher. But again, another thing I want to point out is we have a massive top sitting up here in this. I'm going to draw this right across here. So if the market can break through the 162.90 area on the pound dollar, this should open the door up to the 166, 167. Like, this could really open the door for the British pound US dollar. However, if it cannot get through this area and close above this level, this 162.80, 162.90 area, then the downside back to 159 is wide open. So I would be, basically what I'm saying is I would be fairly quick to get the profit off the table. We're looking to get back into these trades in the 161.70 area, but we want to get the profit off the table and then potentially even consider some shorts around the 163 level. So, because there's definitely, in my opinion, some opportunity there. Now, again, we want to have a look at all of our indicators, look at our high-low break. We can see that we didn't hit the bottom. Again, this is a bullish signal. We didn't hit the bottom of our range today from Vantage Point, and we broke through the top. So you can see that the range tomorrow, that's what this bar is here, is about 70 or 80 pips above where the market currently is sitting now. So again, it still looks rather bullish. Now, last week we had a break. The predicted high-low broke to the downside with the volatility in the equity markets, but this week here the equities come back on strong, and you can see that the pound dollar continues its aggressive move back up. So for now, we'll stay with the trend, we'll stay with those longs. We're going to be watching the 161.70 area. We're going to have about 110 pip stop, and our target is still going to be in and around that 163 level, even though Vantage Point has the predicted high for tomorrow. I believe we were looking, I'm going to bring this back up just so everybody can see it. I believe we were looking at the 163.49 area, 163.41 area. Now again, this is a very, very tall order. So I would still recommend getting these longs off the table in that 162.90 area just to be safe. And then if we break up to the 163.41 level, we know where our retracement point is going to be. It's going to be back in that 162.90, and then pound dollar, if it's going to break out to the top side, it's not likely to do it the first time around. It's likely to shoot higher, retrace back, and then make the big move, whether that be to the upside or to the downside. So those are the market positions for March the 1st, 2011. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.